Hey everybody, this is John Carter from SimplerOptions.com, and let's take a quick look. Today, a pretty big day on the S&Ps to the downside, and a lot of key stocks got whacked. So the question now is this for real? One of the first big chinks in the armor here for bulls that I see is that Aussie yen is looking extremely bearish here. And not only did it take out this key support, it's got a squeeze that's firing off to the downside, and you have kind of a little bit of a head and shoulders top here. Now, if you guys haven't heard me talk about Aussie yen, essentially if Aussie yen is going higher, it represents hedge funds initiating carry trades with the idea of adding on risk. Okay, so they're borrowing yen cheap, they're putting that into Australian dollars, and then they're using margin against those Australian dollars to buy stocks, gold, silver, etc. Okay, conversely, if Aussie yen is going lower, it means they're unraveling those trades, they're dumping assets, they're paying back the yen, and they're selling the Aussie dollars. Okay, so what does that mean? So on a day like this, when you see that Aussie yen is going lower, well, it means that they're paying back Japanese yen loans. So that's why you saw the Japanese yen a little strong today when everything else was down. But they're getting rid of those Australian dollars that they had, so Australian dollar got killed, and they're selling assets. So gold, whacked. Silver, whacked. Crude oil, whacked. Copper, whacked. Of course, stocks, whacked. I mean, now stocks have still held up here really, really well. I think part of that has even been the Apple phenomena, because Apple has just been insane. It's part of every index, and it's a $585 billion company, so it's going to impact everything. But even Apple saw some selling today. Not as much as the overall market, but it is kind of showing like a little bit of a chink in the armor. So the question now is, what's next? And this is the first time I've actually been seriously considering that this market could roll over. The only other time this year was on this move, but then we quickly eradicated it in 2 days. So we're kind of in the same situation here. If this can hold and we start taking out, especially if we take out 1380, then this market is, I think, done for a while, at least for a couple of weeks. And we could see some pretty decent selling. Okay, so what do we do? What do we take advantage of that? We did have a couple of plays. Apple credit spread. Okay, that one. So we're actually, our goal is to be flat going into the weekend. So we're out of that. Amazon, the call credit spread was fine as it worked its way lower. The Amazon did not work out. This one, we were looking at it closing at 200. Today's whack in the market's got that, so that credit spread did not work out. And then we're looking at selling a put credit spread on Netflix, given if we got a buy trigger. Well, Netflix, like the rest of the market, opened up down, 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 and did not get a buy trigger. All right. So right now we're flat. We will consider looking at some of the, especially Netflix, if we get a buy trigger, if it looks like markets are going to stabilize tomorrow. But with the 3-day weekend coming up, it's making a lot of sense to kind of sit back. But again, for the first time, really in 2012, as a trader, I'm excited and interested in the short side of the stock market and all the opportunities that has to offer. So stay tuned. We'll keep a look at that, and we'll see you at the next update.